Calculating capital gains on the sale of your primary residence in New Jersey involves understanding the tax laws that apply to these transactions. Here's an overview of how capital gains on the sale of a primary residence works in the United States, including New Jersey. Number one, primary residence exclusion. Now, in the US, the IRS allows homeowners to exclude a certain amount of capital gains from the sale of their primary residence. If you're married filing jointly, up to $500,000 in capital gains can be excluded for taxation. If you're single, the exclusion is $250,000. Number two, ownership and use. To qualify for the exclusion, you must meet certain ownership and use requirements. You have to have owned the property and used it as your primary residence at least 2 out of the 5 preceding years. And these do not have to be consecutive. So you got to do the math. Number 3, partial exclusion. If you don't meet the full 2-year ownership requirement, but had to sell because of specific reasons, like a job relocation, health issue, or something unforeseen, you might be able to qualify for the partial exclusion. Number 4, how do you calculate your capital gains? Well, to calculate the capital gains, you're going to subtract your adjusted basis from the selling price. The adjusted basis is the original price plus any improvements you made to the property during ownership. Then you take the capital gains, which is the difference between the selling price and your adjusted basis. Number 5, 1031 exchange. Now, say you're selling your primary residence and buying a new primary residence, and it's replacing it. Well, that's called a 1031 exchange. That exchange allows you to defer capital gains taxes by reinvesting the proceeds in a like-kind property. Very useful. And number 6, New Jersey state taxes. Well, in addition to federal taxes, you have to consider New Jersey state capital gains taxes. Now, New Jersey state law can change, so it's essential. Please talk to a professional or an attorney who's very familiar with New Jersey tax regulations. But remember, tax laws can be complicated. They really change over time. So for the most accurate and up-to-date information on capital gains taxes and real estate transactions in New Jersey, please seek the advice of a tax professional or us, real estate attorneys, who can review your situation and guide you through the process. If you have these concerns, reach out. Click below for an appointment, and we'd be happy to go over how capital gains may be an issue for you and your next transaction.